Well, welcome. I'm Illinois Extension's Todd Gleason, farm broadcaster at willag.org. You can find my programming there. This is the winter webinar series. I'm part of the FarmDoc daily team as well. Today, we'll be talking about fast tools and financial planning with Gary Schnitkey and Ryan Batts. We thank them for being with us today. Fast tools and financial planning is a set, of course, of Microsoft Excel spreadsheets that may be used to evaluate management decisions on the farm. And those are going to be demonstrated through the morning. So let's get started with, I think, a quick survey. Right, Gary? Are we going to do that? Just a quick survey to start them out?
Survey about what?
No.
Oh, yes. We'll do the survey. I'm sorry.
Right there. The one you put in the PowerPoint.
The one I put in the PowerPoint slide. We want to do that survey? Yeah, that would be a good idea.
Yeah, let's do that. Have they used the downloadable fast tools or not? Have you used these? Do you know what it is? Just select yes or no. And I said survey. If I'd said poll, I think Gary would have come up with it, but I hadn't used the wrong terminology. So if you will quickly put your vote in there, have you used these or not? About 68% of you have voted, so we'll count that there. 70%, that's what we like to get to. We'll count that, and here we are. The answers have 52% say no, 48% say yes. So we'll get started, and maybe some of those who have not used them will learn something new, and so will those who have used them. Gary, I think, are we starting with you on what the topics are for the day?
Yeah, so what we're going to do here is we got 4 topics today, and we're going to go through our current price and cost projections for 2021. We're actually going we've done those before, but we're just going to refresh everybody's memory, and we're going to use those in our 2021 projections for this year. We're actually going to make a income projection with our farm projection tools. So we'll give our projections here. We'll tell you what FAST is. And then our third topic there is the farm projections tool. We are going to demonstrate that and again use our current prices and current price and cost projections to move through those into our income projections. And then finally, we'll just give an overview of all of our other FAST tools. So turning first to prices and yields for 2020, here is again what we've seen for the past several months. We keep seeing those corn and soybean prices rise, and which is a good thing, but hitting a low in August. Corn was at below $3 in both May and August, and since then we've been seeing those cash corn prices rise. As a result of those price rises, we're thinking that 2021 will be a reasonably good year, or at least that's what we're hoping for right now. And if we're looking at market year projections for 2020 and 2021, and these market years would run for corn and soybeans, would run from September to August. The 2020 and 2021 projections are current projections. 430 for corn, dipping a bit for 4 to 420 for 2021. Obviously, the 430 and 420, if you look back, are higher than any of the other prices since 2015. For soybeans, we're running 1115 and 1125, and again, we're going to be using those prices in our income projections. 1125 and 1115 again are higher than any other year since 2015, and wheat is at 5 and 550. So those are the price projections that we're going to be using. Again, just to recap that, show you what we're showing here for a baseline for corn and soybeans. This would be Central Illinois high productivity. Looking down the list here, we have corn last year at $228 and a $425 price, $969 revenue, ad hoc payments, which would be CFAP and a couple other things, gave us good revenue, and our non-land cost was $571. Farmer return of $199 for soybeans or corn last year. Soybeans 72 bushel yield, 1120 is the price. $860, and then as you can see there, moving down the list, non-line costs were at $359. Operator land return of $492, and then a farmer return given a cash rent of $275 is $217. Again, we're going to move on to 2021. Putting in for our 2021 projections, we will start with a 2.7 or a yield lower than what we were in 2020, and a 425 price. Again, that gives us a good revenue of 922. We have increased the non-line cost a bit, and non-line cost, fertilizer in particular, have been rising in recent months. It's difficult to gauge of how much that will impact 2021 cost, because a lot of that was purchased last fall. So, but expect those 2022 non-line costs to increase to much higher levels. 67 farmer return in for corn in 2021 would be our projections now, and show you what that means for income. And then 2021, we would be coming in at a 166 farmer return. And again, our non-line cost came at 368. Again, setting that up, we're looking at a good price, and if we have close to normal yields, we should be looking at fairly good returns for 2021. Obviously, a lot can happen between now and then. That happens to be a baseline scenario. If you want to make it happier, add some higher yields in there. 230 is sort of what we would think we would expect. In a normal year, 72 on soybeans, and maybe we'll get some ad hoc payments. Again, we built in $25, and as you can see, that would build in a higher farmer return. Again, that 230 yield and 72 bushel soybean yield are above, or that 230 is higher than our trend yield, and $25 ad hoc federal payments would obviously add. So we will use those numbers a bit later on as we're in the farm projections tool. But first, Brian's going to take us through a bit of what our fast tools look like. Brian?
So if you're not familiar with fast tools, we'll just kind of give a brief introduction here. They are housed on our farmdoc site, and the URL here is farmdoc.illinois.edu/fast. We'll show a little bit more about the FAST homepage here in just a little bit. An introduction to the FAST tools is they're Microsoft Excel-based decision-making tools. Currently, we have in the neighborhood of 40 tools, 43 or 44, I believe. They can be downloaded for free, again, from the FarmDoc website. One note to take here is most will run on a PC or a Mac. We do heavily use macros in these tools, and those typically don't work very well with a Mac. But most of the tools will function okay without the use of the macros. There are a few, such as the crop insurance decision tool, that require the use of a PC because there are multiple files. On our site, when you get to each of the tool web pages, you can download the tools as a standalone spreadsheet. Again, that varies a little bit depending on the tool itself if there are multiple files. There's a zip file and an installation file that you can run to install the files on your computer. So I'm assuming most of you have been to the FarmDoc website. Again, this is where we house the FAST tools and some of our other tools. You'll see here, currently we are highlighting one of our FAST tools. We have a Farm Bill What If tool that allows you to compare the ARC County PLC and ARC IC programs. If you haven't made that decision yet, you might want to take a look at that tool. So once you're on the FarmDoc website, you'll see at the top that we have our different links there, and we have one for tools. You're going to want to select that. You'll see we have some different options here. We have our crop insurance tools that it does include our FAST tool, as well as our online crop insurance analysis tools. The second option will take you to the FAST spreadsheet tools, which we're going to discuss today. We've also got the Illinois Farm Management Handbook, and again, our ARC PLC calculators, which will also include the FAST tool that's highlighted, the Farm Bill What If tool. So if you select the FAST tools option there, you'll see you'll get another menu that has all of our different FAST tools on it in alphabetical order. Again, there are several, so we'll go through those towards the end of the presentation and discuss what each of those different tools are used for. So again, here's the link, and off to the left here you can see this is the FarmDoc FAST tool homepage. There's a little bit of information about FAST tools at the top. Then we typically have a section called Featured Tools, where we'll put one of our latest updates or the most relevant tool for this time of year. So again, for example, we're currently in the farm program decision window until March 15th. So we've got our Farm Bill What If tool highlighted as a featured tool. If you look below that, we have our different categories. You can see all of our tools: farm management, financial analysis, grain marketing and management, investment analysis, livestock management, loan analysis, risk management, and yield and land database.
We had a comment here indicating that these will not work with a Chromebook, and that is absolutely true. These won't work as Google Sheets or Chrome. So,
and if I remember correctly, I don't know if it still exists. There was an Excel starter version that they didn't work quite correctly, and you need to have an actual purchased version of Microsoft Excel.
Is that the case? I'm going to follow up just because it's a techie thing. But if he has Office 365 on a Chromebook, it won't work on that? On Excel? I understand the macros problem.
Yeah, it won't work with Office 365, but there used to be a starter kit that...
Yeah, it wasn't a full functioning
version. You need a full functioning version of Excel to run these tools. And again, they won't work in Google Sheets. And most of them, we're converting more and more of them over to work on a Mac all the time. The ARC PLC tool does, but some of them don't. And the one that doesn't, that people would like, is the crop insurance decision tool. And that's going to be a while. Let's just say that's
yes, we would.
Can we use a Chrome browser on a PC? Probably not. I would get no.
I would say no.
No. We had a question. If it doesn't work on a Chromebook, can we use the Chromebook on a PC? And no. So, no. And we'll go. So.
Okay. So the last thing on the FAST Tools website, you'll notice under the categories, we have an option to load more tools. As I said, we've got 40-some tools. And within each of these categories, the latest update tool moves to the top of the category. And if you want to see some of the older tools, you'll just have to hit load more tools and it'll continue to load those. One thing below that, we have the FAST training sessions. So pre-COVID, we used to actually go out and do training sessions. Maybe one of these days we'll be able to do that again. Who knows?
Yeah, we wouldn't mind doing that, but it's probably not this semester. We have to wait for the U of I to open up a little more.
So here are our different categories. Again, we've got all tools. So again, this is going to be obviously all of our tools. And to go to the actual tool page to download either the Excel file, zip file, any documentation we have with them, you can click on the tool name itself or on more information. This is an example This is the tool we're going to go through today, the farm projection tool. This is an example of what you'll find on the individual tool page. So you'll have a little information that describes what the tool does, the last date that it was updated. Keep an eye on that. Going back to the crop insurance tool, we update it quite a bit during crop insurance season, update prices, things like that. So you want to kind of keep an eye on that. Then when you want to download the tool, there's a link here to download the installation file. So that's going to be an executable file that installs the tools on your computer. In this case, there's also a zip file. Some of the other programs will have the addition of the Excel file and some other documentation, and we'll discuss that here a little bit later. In this tool, so this is our Farm Bill What If tool. You can see we have a video, one of Gary's 5-minute farm docs, kind of walking you through the tool. So this is an example of the introduction sheet that we use in all of our tools. So we've got our the tool name, the last update date, and hopefully that will match the update date on the website. There's a little box there that also gives that same description about what the tool will do. You'll notice at the top of the Excel bar above the formula bar, there's kind of a yellowed out bar that has the words enable content. And that wording varies slightly depending on your version of Excel, but in order to enable the macros, you'll need to click on that and follow. In this case, we get this box and we need to hit yes. Again, other versions of Excel are slightly different. As I said before, some of our tools will work without the macros. Some of them require it to access data from other files or to perform different calculations and so forth. Once you've opened the tool and enabled the macros, you're going to hit the continue button in all of our tools, and it will take you to the beginning of the whichever program it happens to be.
What?
Oh. So we're going to go through our farm projections tool. It provides a projected cash flow, break even, and sensitivity analysis for grain farms. There are several things we won't really get into today in here. This tool's got several pages to it, but this is kind of a little bit of an overview on using our tools. So with the data entry in our different programs, we typically use blue text to indicate the cells that the user is going to change values in to perform the analysis. Occasionally, we'll also incorporate a yellow background. However, you can see there at the top, there's a yellow background, but no blue text, so that's not a changeable cell. But the combination is used in some of the tools. The reason we do this is we lock the rest of the sheet in order to protect the formulas so that we can hopefully prevent errors by accidentally deleting various calculations or anything from the tools.
Yeah, so what we're going to do now is take you through the farm projections tool. So we're going to go through this farm projections tool, and the first thing that you're going to see, and let me back up. What we're doing with the farm projections tool is coming up with a projected financial statement for a farm. When you hit the farm projection tool, the first thing that you're going to come to is a set of budgets. And these budgets are exactly the same format as are our Illinois crop budgets. And you can use, and if you decide to, you can use our budgeted defaults. We have those loaded in there, and use those budgeted defaults as for example, fertilizer for 2021, we have in there at $135 for corn, and you can use that as a default. If you go into the budget setup what you're going to see are various options for setting up the budget. We have in here default budgets for northern, central, and southern Illinois. Those happen to be for the same ones that we publish on our farm management handbook and on our farmdoc website. We're showing central Illinois high productivity budgets. We use those for 2021. We actually, if you use a drop-down box, can put more years into them. We also allow various ways of calculating direct expense calculations. Most people use the budgeted items. We also allow more budgets to be included. Right now, you'll notice in the display the following budgets box. We have corn and soybeans. You could have corn after corn, soybeans after corn, and wheat. And then if you hit wheat, you can also include double crop soybeans. Once you make your choices here, so if you're in Southern Illinois, for example, you would hit Southern Illinois, corn, soybeans, wheat. And if you have double crop soybeans, you would also click that box and you could enter all those items and they would show up in our box. Again, we're using 2021 values here. We keep in the tool all years going back to 2001. So if you're curious, you can go look and see what budgets were for those previous years. Once you have the budget entered, we're ready to go to our next step. And again, this is the farm projections tool. And we can use that to do a number of things. But if you hit the continue button here, you've got the budget set up. You actually could print out the budget here. We allow for two different types of analysis. Lease analysis, and that would just allow you to compare different leases, and that would take you down one stream. And in the lease analysis, you would set up some leases, and then you would get lease analysis results, per acre income analysis, and sensitivity analysis. We're not going down that road today. We're going down the farm projections road today. And here you would then have various levels of input, reports, and one of the bigger ones in the report side is the projected financial statements. And then you can also have additional analysis with sensitivity analysis, cash flow, repayment capacity, so on and so forth. So those are the options here. But you've actually done already one of the inputs, the crop budget input. Let's just go through the inputs that we do. We've already done the crop budget input. And again, the budgeted defaults come from Illinois crop budgets. We put 2021 budgets in there. So those items are already there. You could make changes to your budgets to set up your own scenario. We also ask that you put in crop insurance and county selection. We'll show, and again, we're just going down the major inputs to show you what those are. We're going to go to that crop insurance input selection right now, or we will go there. There's also farmland leases, which will show our lease setup, farms setup, where we put on acres, loan, other cash flows, and then we finally can make final adjustments. All right, so now we're going to go start again. We did the budgets, and again, those are University of Illinois budgeted defaults. We've shown what those are. We get the whole 9 yards. There's revenue, direct expenses, power expenses, and overhead expenses, exactly following our University of Illinois budgeted format. And then you go into next the crop insurance setup and county selection section. Here is what that program looks like. We make a county selection, which brings in some data that we use later on. But here our selection is RP85 for corn and RP85 for soybeans. We have a 210 bushel APH and the 65 bushel soybean APH. The reason why those become important is if you go back and enter prices that are low, it will trigger payments, prices or yields in this case that are low. And so we've have the RP policy built in, and those income or revenue from those policies will come into play if you enter prices and yields on your budget setup that cause those payments to trigger. So that allows us to do some sensitivity analysis to incomes for different prices and yields, and include those payments from crop insurance. After we get back, we always go back to the farm projections menu, and now we're going into the lease setup. So we're going down our lease setup. Here you tell us something about your leases on your farm, and we have 2 leases for this farm, a share rent, which has split 1, and a fixed cash rent. And our fixed cash rent is $275. So you could enter a higher cash rent if you so chose. But this farm has 2 leases, a split rent, a share rent, and a fixed cash rent. If you go into our lease selection, you can see that we have different leases. We have 9 different leases that you can choose from. And if you, for example, have a share rent with a supplemental rent, or have 2 different share rents, one with a little different split of revenues and expenses. For example, some share rents, particularly as we go in the southern part of the state, are 2/3, 1/3, or 60/40s. You can enter those here. We also have the more common share rents with variable cash rents. So those would be included here as well. And then we have custom farming as well. So any one of those can be entered. You make the lease selection. If you click any of those, you'll have more input there. All right. And you can, and obviously the lease setup will make everything more or less complicated as we're moving on. As we're moving into the farm setup, we put together a 1,800-acre farm here. And we did this 1,800-acre farm that's roughly equivalent to the average farm size of a Illinois farm. It's a little bit, just a tad, 100 or so acres. If you look at what the averages are in FBFM, this is just a tad bit larger than that, but we wanted even numbers here. We have 200 acres owned, which would be pretty typical for a farm that's split between corn and soybeans. We have 400 acres of share rent and 1,200 acres of cash rent. Obviously, if you switch those around, you're going to have different feel for risk and returns under different prices and yields. And again, over time, we've been seeing more and more of a move to cash rents. So when I started my career here several years ago, that would have been closer to 50-50 split. And now we're moving more and more to cash rent. Obviously, those will vary across the state, with Southern Illinois having more share rent and Northern Illinois having more cash rent. So you enter those inputs there, and then it will simply add up the acres. It will make calculations based on the budget and these numbers, what revenues and expenses look like. And we'll also calculate operator bushels, or what you would expect to produce this year. And in this case, given the acres and the yields that we've entered, we'd be looking at 176,000 bushels of corn, 54,400 bushels of soybeans. So that's the farm setup. And again, acres are entered here, as well as you tell us what your loan situation looks like. You would enter different loans here. We have 3 loans here and $1.4 million in loans. There are utilities here that calculated interest, principal, and interest. You could enter those as well. And then some other income, revenues, and expenses. You see they're listed at the bottom: other farm revenue, non-farm revenue, family living expenses, capital expenditures, and income and Social Security taxes. We should have probably put capital expenditures higher this year. My guess is we're going to have more than 0. but we'll keep going through here. Those other revenues and expenses, you'll see here is we estimate all revenues and expenses based on those budgeted amounts and also acres entered. So you don't, and we allow those to be changed. But these three items here, you can't estimate, or those other revenues and expenses are items that aren't specifically related to acres. We then allow revenues and expense adjustments, and this is our final screen here. And as we said, we estimate crop revenue and all the variable cost and all of the other cost. We estimate those. So if you're looking at variable cost, fertilizer, we come in with an estimate of $143,200. That's based on those budgeted amounts entered for corn and soybeans and the acres. So we enter those acres, and then we calculate that as $143,200. If for whatever reason you want to increase that or decrease that, you can right here. And if we wanted to increase it, we could just put plus or minus value. If we put plus 10,000 in the adjustment column, we would have $153,000. All right, that's our input. And if you take our input, you can enter things fairly quickly. Now we're going to go to the reports, and we are going, there are a lot of reports that you can look at. And as you're going through the year, you could enter your hedging amounts or your bushel contracts, and then see what you're at risk. And now I'm talking about the additional analysis on the right. You can do a cash flow statement, but we're going to keep it simple here. We're just going to do a projected financial statement. So we're going to show you, and again, we have an 1,800 acre farm, trend yields for Central Illinois, and our prices for this year. And now we have a poll question. Before we show the real results, how optimistic are you about 2021 incomes? Very optimistic. Chance to have a good year. Cautiously optimistic. Been here before. This could be a trust issue, though. If you got to put some trust in there, right? This is going to all crash and burn before fall, and we will be back to low income. So we'll see what you say here. This is obviously an unscientific poll here.
That last note is perfect time to thank our sponsors too on that, which include the TIA Center for Farmland Research, Compeer Financial, Farm Credit, Illinois, Growmark, the Illinois Corn Growers Association, and FarmDoc. We're almost to 70%, Gary. Just a couple of more votes. There we go. What'd we get for answers?
All right. 34% are very optimistic. Chance for a good year. 65% are cautiously optimistic. That is, Brian and I were talking about what could go wrong today. But most are cautiously optimistic, and only 1% are in the crash and burn category. All right. So here's where we're at. If you believe our projected net farm income, those items result in $226,675 of income. Just a couple of notes here. That's all crop revenue. We don't have crop insurance payments or government payments in there because none of that price and those prices and yields would not generate any government payments. We also did not put in here any ad hoc federal payments like CFAP or WIP or MFPs. So we'll see if those happen, but those are all zero. And we come out again with $226,675 of income for this farm. To give you a feel and put this in context, this is what grain farm net income, and again, that 1,800 acre farm is pretty close to the average what we would be at in 2020. This is what incomes have looked like in the past. For 2020, we're projecting $180,000 of income, and much of that will depend when CFAP 1 is recognized, and a lot of differences there. That $224,000 would be roughly the same level, maybe a little bit lower if you made some adjustments. But we're looking at stringing a couple of good years together here. 2012 was our high income years, the drought year, $298,000 of income or net farm income that year. So good years, much better than 2014, 15, 16, 17, and above 18 and 19 as well. So that's where that projection would be at, just to put some historical feel for that. We looked at incomes, we took our farm projections tool and did a couple different scenarios. We began with 425 price and 1125 soybean price, corn and soybean price, 220.68. We rounded our incomes to round thousands, 227. We fall back to that 390 and 1050 price, 124,000. 350 and 10 would be $53,000, and that includes some PLC payments in there. So that'll give you a feel. Again, that 350 and 10 would be right back where we've been in the past several years, 53. 425 and 1125 takes us up to $227,000. All right, we did higher yields, $4 price and 1050. So we dropped the price a bit, and that kept income levels right at where we were before, with 425 and 1125, just higher yields, and then going back 325 and 10, $129,000. So those, and again, that 235 and 72 would be above trend yields. So those incomes, good. $129,000 would still be above our 5-year average from 2019 on back to 2014. So 350 and 10, given those above average yields. Again, that 350 would trigger PLC payments. So PLC payments would be coming in there as well. And then just to give you the drought scenario, so 150, 60, crop insurance is making some over $100,000 of payments on this farm. We had prices go up to $5.20 and $12.20. That's less than $1 increase on corn, and you could make an argument that it would be much more than that. But if we have any sort of price response to a drought with crop insurance, we would be sort of back to our over $200,000. It would be not as good, but if we could get that $5.50 price and $13 corn and a drought scenario, we wouldn't be in too bad of a situation. In any case, if we're looking at it for 2021, those lower prices, actually your scenario that will probably result in those lower incomes would be something where Illinois has a close to average to slightly above average yield, and for whatever reason, prices come down, which has been known to happen in the past. Just to summarize here, 350 and 10, just to show you the difference in what those yields do. Obviously, those yields will have an impact again. And then just looking at our scenario there as well. In any case, that was put together rather quickly by the farm projection tool. If you look at the farm projection tool and that income statement, we just went back and changed the prices and the yields on the budget and quickly got a feel for what our incomes would look like. I'd also note that we have sensitivity analysis tables within the program where it will do that automatically. So that's our breakdown of the farm projection tool. Ryan's going to take us through
Yeah.
our other tools.
He is. There are other fast tools, and Ryan Batts will take you through those. We're going to get a quick poll, though, first, I think, Gary. Let's bring this up. Would you watch a short webinar, a video on fast tools? Yeah, I think that's a great idea. Yes, but I'm being nice and will most likely not watch. That's an interesting one. I like the idea of video documentation. Only if I have problems using the tool and just a flat out no. So take a moment and fill that poll out, and we'll see what your answers are. And just if you've not watched the 5-minute farm docs, and I'm going to guess that most of you probably have, I would think that would be in that kind of range. That's what you're thinking about, right, Gary? Is
Yeah,
something like
5 to 10 to 10. So we would have documentation for each tool that would take you to it in 5 to 10 minutes.
Yeah, so very quickly, just a video that would show you how to use it. You watch it on YouTube. Looks like about 67% of you voted. By the way, lots of times folks want to know how many are on board with us. 211 at this point. So go ahead and pull that up. Here are the answers to that. 52% sure. That's a good idea. 7% say yes. 2% say, yeah, no way. I do like that that there were 7% say yes, but they were only being nice. Ryan Batts, what other tools do we have available that folks can go through?
Let's get you back here. There you go.
So again, this is our Fast Tools homepage, and we've got the list of the different categories at the bottom. So to go through, this won't be all of the tools, the vast majority of them, but you can see this is our farm management section. So we've got a cash rent with bonus worksheet. So this would be used to come up with some of those different variable cash rent leases. There's all kinds of different ways to customize the lease within there. This one is a really simple spreadsheet to go through. Enterprise allocation, the farm projection tool, which we just went over, the farm rent evaluator allows you to use those historical budgets and plug in different yield and price scenarios and see how different rental types, lease types would perform. And this includes some of those variable cash rent options. It actually has all those different leases that we discussed in the farm projection tool. Machinery economics, this allows you to kind of come up with different costs for different types of machinery. Also has some information on weather for planning or for different field operation windows. Our planning decision model might be something you want to take a look at this time of year. Allows you to, again, use those budgets, plug in your yields and expected prices, and make crop rotation decisions if you have some flexibility there. It also has a prevent plant, replant decisions in it as well. And then we have a specialty commodity break-even analysis. The next section we have here is financial analysis. This one does contain several additional tools that aren't on here. We've got an appraisal of current financial position. Our balance sheet program allows you to not only put in any given year, but you can also do multiple years of balance sheets, as well as the cash flows to connect those balance sheets. We've got a cash to accrual income approximation tool, earned net worth account allocation, estimation of deferred taxes. Then we've got a couple of different cash flow options. We've got one on a monthly basis and one on a quarterly. So the quick cash flow is actually a quarterly cash flow statement. Tried to give both options for people. They are slightly different in how they work. So if you're ever interested in those, you might take a look at those. Personal financial statements, and then a repayment capacity analysis. As I said, there are some other tools that in this financial analysis category. We have a few grain marketing and management tools. The first being a basis tool. Some of you might be familiar with this. In the past, we actually used to enter basis information, I think on a weekly basis. But this tool now has been updated. You basically need to track your own elevator or delivery terminal or whatever. And it can be updated annually. You can add sheets for multiple years. So it allows you to track basis over time. Grain inventory management allows you to track grain inventory on farm, off farm. You can set up your individual farms and fields and crops, as well as storage or delivery points, and track where those bushels are, as well as any pricing or contracting you've done. Our grain pricing tool allows you to look at some different options for using futures and options to hedge some of your grain production. It also allows you to compare net returns to different delivery points or different delivery months, or the combination of the two. So like delivering to local elevator or an ethanol plant or something like that. It takes into account the transportation costs and different things. So there's several different pieces within that. Investment analysis, the next section. We've got some capital budgeting analysis, grain storage purchase analysis. So in this one, you can plug in the cost to build your grain storage. And then there's also a sheet that allows you to enter information to, say, calculate returns to that storage or returns to on-farm drying or whatever compared to going to an elevator. Land purchase analysis allows you to plug in assumptions to analyze purchasing farmland. So your tax rates, expected returns, stuff like that. Lease versus purchase analysis allows you to compare leases versus purchasing different assets. Machinery financing, another financing tool that allows you to compare different financing options. Maker's calculator allows you to calculate your depreciation. Savings calculator and time value tools. We've got a few different livestock management tools. We've got a beef profitability model, cost of feedstuffs calculator, and a dairy profitability model. We've had a question asking if we can send out the website for farmdoc. I assume we can do that easy enough.
If you go into farmdoc, though, the quickest way is to go to farmdoc and go to the sections fast, and that'll get you there. So, and we will, if we can figure this out, we will show you where it's at.
The address is just farmdoc.illinois.edu. So all one word, farmdoc, and then period, Illinois, period, edu. So go to the FarmDoc website. It's different than FarmDoc Daily, but actually it doesn't matter which of the two websites you go to. You'll find the tools section on either of them. So it's pretty quick and simple to get to. Again, FarmDoc Daily or farmdoc.illinois.edu under the tools section, and you'll find fast spreadsheets there. And when you drop down, everything should pop up. So you'll find all of these tools there.
Got a couple other sections left here of our different tools. We've got some loan analysis, so loan amortization. So you can come up with your amortization schedule for different loan options. It allows you to customize the loan in there. Loan comparison does just what the name says, allows you to compare different loans. So maybe you got different rates or different terms at different institutions. A revolving loan calculator allows you to keep track of your operating note throughout time. Risk management. So we kind of discussed the farm bill tool, and that's one of those things. Each time there's a new farm program, we'll probably have a different farm bill tool. Crop insurance tool gets updated every year. We did recently release an ECO SCO payment estimator. It's also in the crop insurance decision tool to help with the decisions based on your crop insurance decisions. If you want to take a look at the payments for ECO and SCO. There's also a marketing and crop insurance risk model. And then the last category of tools is the Illinois Soil Productivity and Yield Utilities. So this takes the soil information, the PIs, and allows you to, come up with an average PI for a tract, or some different parameters there. Yield Risk Evaluator. This has yield information, historical yield information for states and counties across the country. Allows you to do some different analysis with those yields for your state and county. And this is beyond just Illinois. It's the Corn Belt and most other production areas.
And Todd?
Just as a reminder, you can visit our website, and you can find all those tools at farmdoc.illinois.edu/FAST. Thanks to Mike for sending that in. I've forgotten just how quickly you can get to it. So farmdoc.illinois.edu/FAST. We would like to thank our sponsors for the day. They include the TIA Center for Farmland Research that's operated here on campus. It's farmland.illinois.edu. Also, Compeer Financial, the Illinois Soybean Association, Farm Credit Illinois, Growmark, the Department of ACE here on campus, and the College of Agricultural, Consumer, and Environmental Sciences, and the Illinois Corn Growers Association. And special thanks, of course, to Gary Schnitkey and to Ryan Batts. Gentlemen, thank you for being with us. And that does wrap up our last in this winter webinar series. Be sure to visit our websites. They include farmdocdaily.illinois.edu and farmdoc.illinois.edu. There's a YouTube website. You'll find everything from this winter webinar series archived there, but it's easy enough to get to. Just go to the one of those two websites, FarmDoc or FarmDoc Daily, and you'll look for the webinar series. Click on that and you'll find the archive. And Jim Bolts has been behind the wheel. He'll have this one up along with everything else very shortly. And you'll find some of those 5-minute farm docs there as an example of what Gary Schnitkey was talking about in the way of production for fast tools. Gary, Ryan, thank you for doing the program today. We appreciate it.
Thank you.
Thank you.
You all have a good afternoon. On behalf of the Farm Doc Daily team, I'm Illinois Extension's Todd Gleason.